Well, in continuation of its expansion drive, United Bank for Africa has started operations in Kenya, East Africa's largest economy. The bank opened its doors formally to customers in the country at the start of the month, having met all operational requirements of the country's apex financial regulatory body. And to talk us through some of the company's strategy moving forward, Manz Denga, CEO of UBA Bank in Kenya, joins us now live from our studios over in Nairobi. Manz, thanks so much for joining us this afternoon. Well, let's look at your setup in Kenya specifically and how UBA has positioned itself in a very competitive playing field.
Thank you. UBA took deliberate steps to come to Kenya, having analyzed the economy and seeing opportunities. Kenya is a vibrant economy. In East Africa is the dominant one, and UBA being the dominant bank in West Africa, we thought we could use our resources to support the Kenyan banking population, which we've analyzed and seen that it holds much for us.
Of course, if we look at some of the players, Manz, in Kenya, I mean, we've got those like Equity Bank and KCB that are intent on regional expansion. They're very innovative in their approach and strategy in tackling this landscape. While on the other hand, we've got Barclays and Standard Chartered that have become a little bit more tempered in their approach, a little bit more conservative in their approach, and are showing that they're reaping the rewards of that kind of strategy. So what kind of strategy are you actually going in with here?
Thank you. We will have a mixed strategy. In Nigeria, we're a deep consumer bank with over 7 million customers, just like what Equity is in Kenya. And then we have the resources of a Barclays, of a Stanbic. So we'll stay in the middle, combine both strategies, and then penetrate and get Kenyans unbanked into the banking stream. Yeah.
So, sounds good in theory, but even the strong contenders have been struggling to attract depositors their way in the current climate, to the extent that they've had to keep high interest rates in place. We've got Kenyan commercial banks standing at an average of 15% compared to the 7.75% by the Central Bank of Kenya. So how competitive can you afford to be in that regard?
I think UBA has the advantage of having the backing of the group and being in Tanzania and Uganda. So we have the support of the group and the region. Don't forget the fact that we've been in New York for 26 years and we have low funds there. So when we come in, we can play at whatever interest level that can be taken off the market by the consumer.
So will we be looking at some relaxation on that front in a bid to attract customers your way in terms of lowering interest rates?
That's right. We seek to add value because let's not forget our intention is eventually to draw the Kenyan unbanked into the banking stream. So we have to do something different. We have to add value. We have accounts that people can open without any initial deposit. All this is intended to lure the customer and then get him to see the benefits of banking with UBA.
At the same time, lending is a risky business no matter where you're sitting in the world. So while there is room for some relaxation on that front, I mean, what are some of the risks you face operating in Kenya right now?
Yeah, we typically, when we go into a market, we study the lending side for 4 months before we start lending. The risks I see in Kenya are the risks that are prevalent across Africa, some of the places we've looked at. There is a risk of non-formalization of title. You know, people have title to support their credit, but it's not formalized, it's not registered. So when there is an issue, positioning it gets tricky. We also have a risk of fraud, learning from what has happened to the other bank, where the same title is used to borrow in 2 or 3 places. So we are studying it very carefully to see how we can go in and come out clean.
Yep, certainly lessons from operating in Nigeria over the past couple of months are vast. I mean, what investments have you made in terms of risk management and controls to mitigate against some of those risks moving forward and reducing your vulnerabilities in Kenya specifically?
Yes, we have gotten a robust IT platform, Finacle and FinOne, to support the lending side and strengthen it. We've also gone ahead to hire somebody who has 35 years management of risk from South Africa, and he's our chief risk officer in Nigeria. And we've centralized risk management at the group level. So given all of that, we think that we will not be hurt in Kenya.
Let's talk about partnerships and synergies here. I mean, it's the extrapolation of synergies that has certainly worked in Equity Bank's favor. It's helped coin the phrase, the mobile wallet. What kind of relationships and synergies can we be expecting from your end at a time where you are saying that there is this clear emphasis being placed on actually bringing in the unbanked?
Yes, I think we have synergy at two levels. One, we are working with Postbank to use their outreach to bring in customers, and then we're working with the group to see if possibly in time we can acquire a local player or two to support our spread. So yes, we are open to discussions.
So overall, as the group continues this expansion strategy and its expansion drive, what impact do you actually see Kenya having on the bottom line in terms of contribution to earnings, to UBA's, to the UBA group earnings moving forward?
Yes, I think we must say that as at now, 70% of our earnings are gotten from Nigeria, which is why we are seeking to reverse it, to move it towards, reduce it to 50% and 50% the rest of Africa. Kenya stands larger than East African operations. So in terms of UBA in Zambia, in Uganda, Tanzania, and Kenya, we expect Kenya to contribute 70% earnings. At the group level, we will start with contribution of 5% thereabout in the first 12 months of operation in Kenya.
Manz Denga will be tracking those developments and earnings moving forward as well. So thanks so much for having joined us this afternoon.